My name is Bob Peelman. I'm the Director of Wealth Advisors, partner at OJM Group here in Cincinnati, Ohio. I'm a certified financial planner. And today I want to talk to you a little bit about your money, finances, and stress. How it can really work on your financial fitness. 78% of Americans are living paycheck to paycheck every single month, according to the latest survey at Career Builder. Another study from the American Psychological Association found that 60% of Americans feel stressed about money. What are some of these stresses? Certainly meeting daily living expenses are very stressful for many people. Rising cost of childcare, wondering if you're on track for retirement, debt, student loan debt, especially right now, is a very hot topic. Spouses with different financial priorities. And then you take all of that and you add in a pandemic that we're having right now, which heightens many of these issues and also creates some new ones. Creates issues of anxiety about your job and whether or not you have employment that is certain. It creates anxiety about how our economy will bounce back from what we're going through right now. So the pandemic, I think, does create some opportunities. I think it's an opportunity as we all sort of slow down to reevaluate our priorities financially, what's important, how we spend our money, how we save. So I think, when we're talking to clients at OJM, we always start with creating some financial pillars for your financial freedom and your overall wellness. And those pillars would be, number one, having a budget or a cash flow statement. Budget is simply all of your income minus your expenses. But I always recommend really digging in and being specific and looking at past monthly statements at your bank and looking at what you're really spending so you have an accurate understanding of your expenses. And I often recommend to add, once you see that expense number, go ahead and add 10% to it, because we all know there are things month to month that will come up where they're not foreseen, and you really don't want to be caught off guard. So having that little buffer when you look at your income and expenses by adding 10% of your overall expense amount, I think will give you a better understanding of what your true monthly and annual expenses are. Number two for your pillar is pay off that bad debt. Make that your number one priority when you look at whatever positive cash flow that you do have on a monthly basis, is paying off revolving lines of credit cards, high interest loans. If you have a personal loan or a loan to a family member that's outstanding, is really chipping away and paying those off right away, because I know that really adds to a lot of financial stress. Thirdly would be an emergency fund. 3 to 6 months of expenses. A lot of financial planners differ on where you fall on that spectrum, depending on if you're married and a spouse who also has some income. But having that liquid savings is a very important component to creating some financial freedom, because when you do have those emergencies, a new furnace needs replaced, something goes wrong with your car, or you need a new roof, you have those funds that you can tap and not really try to create that extra burden with credit card debt. And number 4 and 5, retirement savings and education savings of the pillars, sometimes are flipped depending on the priorities of a particular individual or family, but we always recommend prioritizing retirement savings over education savings. I often joke you can't take a loan for retirement, but you can for your children's education. So while you may not want to take loans out while they're in college, you do have that opportunity where you don't with retirement. So taking advantage of your 401ks, your 403bs, your qualified retirement plans, where you can put that money away, get a tax deduction, your money grows tax-free, and you are then taking the money out, paying ordinary income tax rates in the future at retirement after age 59 and a half at the earliest. Those vehicles sometimes come with matching, profit sharing matches from a practice, from a hospital, from your company. I think are very, very important parts of your retirement savings plan. And then the education component of that pillar, I would say, there's a variety of vehicles available to you. There's 529 plans would be the most prevalent and well known, but again, opportunity from a tax advantage standpoint to put money away for your kids' education. And that's going to allow you to have a lot of flexibility. You can change the beneficiary of an education savings plan to a sibling. Just creates a lot of flexibility. And so I would say, the importance of establishing a plan is number one, but secondarily, really monitoring and reassessing that plan is very important, because, to manage your stress levels and be confident about your financial decisions that you're making, you really want to have a plan written out, a plan that says, here's what we're trying to do, whether it be for retirement, education, emergency funds, a future home purchase, a second home purchase. Having it written out will give you a little bit of peace of mind and accountability that when you are trying to create that plan, that it's something that you agree with your spouse, and that you can hold each other accountable to, and that you're monitoring and reassessing. So, writing that plan out is of utmost importance. And I would leave you with having a financial advisor or planner is extremely important. They can, number one, help you write that plan down, but can create long-term savings strategies, investment strategies to help your money grow. All of these things are going to take care of your current needs, but also plan for the future. I recommend interviewing a minimum of 2 financial advisors, really doing your homework, going and looking at reviews of the financial advisor, asking for references, making sure that your advisor is a certified financial planner, making sure your advisor, asking them how they're paid is very important, what their fees are, making sure there's no conflicts of interest. But once you've identified the financial advisor that you want to partner with, all of these pillars that you build out are going to be a lot easier for you to monitor, and a lot easier for you to reach your goals, and overall create wellness and some financial freedom. Thanks for listening today.